Have you ever looked at the MACD, one of the most popular indicators out there, and just wondered why so many traders can't seem to make it work? Well, today we're going to fix that. We're not just covering the basics. I'm going to break down two powerful, high win rate strategies that you can start testing literally right after this. So here's what we've got on tap. First, a quick refresher on what the MACD even is. Then we'll get into the big one, the fatal flaw that trips up almost everybody. After that, we're diving into the good stuff. Two killer strategies, one for beginners and one for the pros. Sound good? Let's get to it. All right, section 1. Let's start from the top. When you pull up the MACD on your chart, what in the world are you actually looking at? Okay, so its full name is, a bit of a mouthful, Moving Average Convergence Divergence. Yeah, I know, but don't get hung up on the name. Its job is actually pretty simple. At its core, it's a trend-following momentum indicator. All it's doing is showing us the relationship between two different moving averages, and that gives us some really valuable clues about which way the market might be leaning. And when you actually look at the indicator on your screen, you're going to see four main things. You've got the MACD line, the signal line, this bar chart thing called the histogram, and then the zero line that cuts right through the middle. But the two we really care about, the two that are the stars of the show, are the MACD line and the signal line. The MACD line is the fast one. It's super sensitive to what price is doing right now. The signal line is slower. It's smoother. It's kind of like the hare and the tortoise, right? One's zipping around and the other's taking its time. And that brings us to the main event, the thing every trader is watching for, the crossover. It's exactly what it sounds like. When that fast line crosses the slow line, that's our signal. It's a heads up that momentum might be shifting. If it crosses up, that's bullish. Crosses down, bearish. Seems pretty straightforward, doesn't it? But there's a catch. And that catch is what this is all about. This is probably the most important part of our whole chat today. We're talking about the crossover's fatal flaw. Seriously, understanding this one thing is the difference between making consistent trades and just getting chewed up by false signals over and over again. So you have to ask, right? If it's just watch for the lines to cross, why on earth do so many traders get wrecked using it? It's a fantastic question. And the answer? Well, it's simpler than you might think. Here's the mistake, the trap that almost everyone falls into. They take the signal completely out of context. Look here. You've got a picture-perfect crossover to the upside. The fast line shoots above the slow line. That's a buy signal, right? A lot of traders would just jump in right there, no second thoughts. But, and this is a huge but, when we zoom out and look at the bigger picture, oh boy, that perfect buy signal was just a tiny little bounce in the middle of a massive, powerful downtrend. So yeah, the MACD showed a flicker of bullish momentum, but the market itself was absolutely tanking. That trade was doomed from the start. It all comes back to that number one rule: you can't fight the overall trend. And that brings us beautifully to our first strategy. We're calling this one the trend follower. It is a super simple rules-based way to make sure you're always trading with the market, not against it. It's designed specifically to filter out all those nasty fake-out signals. Okay, so here's the playbook. It's a simple 4-step plan. Step 1, we need a trend filter. For this, we're going to use the 100-period EMA. Super simple rule. If the price is above the 100 EMA, we're only looking for buy signals. If it's below, we're only looking for sell signals. Got it? Okay, step 2, we wait for a MACD crossover that agrees with our trend. Step 3, we enter the trade. And step 4, we manage it. We'll put our stop loss at the nearest swing high or low, and we'll target a profit that's 1.5 times whatever we're risking. Let's look at a real example. So here, the price is way above our 100 EMA. That tells us the trend is up, our bias is long. That means we completely ignore any downward crosses on the MACD. They're just noise to us. We just wait, and boom, right there. We get that beautiful upward crossover. That's our green light. It's simple, it's clean, and most importantly, it's flowing with the trend. And let's flip it for a short trade. Now, the price is trading below the 100 EMA. The market's in a downtrend. So what's our job? We're only hunting for downward crossovers. Any of those little upward crosses, we don't care, we ignore them, and here we go, we get a clean cross to the downside. That confirms the bearish momentum is continuing, and that is our signal to go short. Okay, so that was the trend follower. Super solid, great for beginners. But now, for those of you who are a bit more comfortable reading charts and understanding price action, let's level up. We're going to look at a more advanced technique I like to call the sniper. And just like the name suggests, this is all about getting those ultra-precise entries right at key turning points in the market. The sniper playbook is all about combining two powerful concepts: price action and multi-time frame analysis. So here's how it works. First, you start on a higher time frame, maybe the 4-hour chart, and you find a really obvious key level of support or resistance. Then, you just wait. You wait for the price to come back and test that level. And now, here's the pro tip, the secret sauce. You don't wait for the signal on the 4-hour. You drop down 2 time frames, say to the 2-hour. And that's where you look for the confirming MACD crossover to get in. Okay, let's walk through an example. We're on the 4-hour chart. See this level right here? Price came up, hit it, and got rejected hard. That tells us this is a major resistance zone, so we mark that on our chart. Now, fast forward a bit and look what's happening. Price is climbing right back up to that same area. This is where we get interested. We are now on high alert, looking for a reason to short this thing. Okay, and this is where the magic happens. A normal trader might wait for a MACD cross on this 4-hour chart, which could take forever and give a late signal, but not us. We drop down to the 2-hour chart, and as the price just comes up and kisses that key resistance level, we are glued to the MACD on this lower time frame. The second, the very instant it crosses down, we're in. We've just entered the trade way before everyone else. So what's the big deal? Why go through all that trouble? Well, getting in early like this means you can use a much tighter stop loss. And the tighter stop means your potential risk-to-reward ratio just explodes. We're talking about potentially more than doubling your profit on the same move compared to waiting for the slower signal. An early entry with less risk, I mean, come on, that's a game changer. All right, so there you have it. 2 very different but very powerful ways to trade with the MACD. Let's do a quick side-by-side so you can figure out which one might be the best fit for you. Okay, on one hand, you have the trend follower. Its goal is simple. Trade with the big main trend. Your tools are the MACD plus that 100 EMA. This is hands down the best place to start for beginners, and it really shines when the market is moving in one clear direction. Then you have the sniper. Its goal is all about precision, getting in at key reversal points. Your tools here are the MACD plus your own price action analysis. This one's definitely for more advanced traders who are confident in spotting those critical levels. Look, if there is only one thing you remember from everything we just talked about, please let it be this. The MACD by itself is only telling you about short-term momentum. That's it. You have to give it context. You have to combine it with the bigger picture, whether that's a trend indicator like an EMA or a key level on your chart. A MACD crossover with no context it's just random noise. Because at the end of the day, an indicator isn't a crystal ball. It's just a tool. It's like a hammer or a screwdriver. The real skill, the real edge, comes from knowing how and when to use that tool to confirm your own trading ideas. So the question I'll leave you with is this: what will you use to confirm your next trade?